In this section, we'll be discussing the phases of the EMA strategy in an uptrend. Those phases are the reversal extension, the wedge pop, the EMA crossback, the basin breaks, and the exhaustion extension. The first phase is the reversal extension, the characteristics being large separated EMAs and signs of a reversal candle, seen here. Let's take a look at this phase in more detail. As we are familiar with already, our 8 EMA and 20 EMA on our chart are extended from one another and price is finding a bottom. We know that we might be looking to see a crossover in the near future, and some of the characteristics we look for are a bottoming of price. We see here that the price is not able to break lower and find support, while the following candle is both bullish and engulfing the previous two candles. This is a characteristic we are looking for from our reversal extension. Followed by the wedge pop that allows the price action to take back over the EMAs. For our wedge pop phase on our 30-minute time frame, we are looking to see a bull flag pattern form on top of the EMA that we are trying to cross over. In this case, it is the 8 EMA. If we use our replay function, we can see this form in real time. The price is trying to break the resistance of the 8 EMA and forming a bull flag pattern in the process of doing so. The EMA crossback, wherein the price action comes back below the EMAs and then causes the EMA cross. If we remember from our unit on EMA crossbacks, we know that there is typically a reaction when both price crosses the EMAs and the EMAs cross themselves. For the use in this strategy, we are particularly looking for the price action to cross back underneath the EMAs before the EMAs crossing themselves. As we see, price action here has moved out of the wedge pop or the bull flag. We see that it is capable of crossing both the 8 and the 20 EMA and then quickly crossing back underneath them. In this strategy, the crossback underneath is the final push that the price needs to find additional support set by our wedge pop in order to have the EMAs cross over one another, signaled here by this purple cross on top of our 8 and 20 EMA. Various areas of base and break, wherein the price action bases before breaking to higher highs. Because we know that our EMAs can act as support and resistance lines, what we look for in our base and break phases are not only a tightening of price action for a move higher, but also the hold of our short EMAs. Using our replay function, we can see the price squeeze into a tighter range while also holding the trend set by our short EMAs in order to make continued moves higher. The price flattens but holds our 20 EMA, and when the boxes set by the base are broken, the price is able to make another leg higher. These are the characteristics of the base and break phase. If the phrasing of base and break is momentarily confusing to you, you are more than welcome to refer to the boundaries set by the base as support and resistance. It's quite clear to see that the top of our boxes in the uptrend phase are simply resistance lines. The important difference is that the EMAs are acting as trend support, and once we touch our EMAs, we are able to break the resistance set by the base and move higher, repeating this phase often many times until the longer of the two EMAs is broken. And the exhaustion extension, wherein the EMAs have become too separated and the price action slows or exhausts itself and shows signs of reversal. Lastly, we have our exhaustion extension. Remember from our unit on EMA crossovers that first we're looking for price to fail to make higher highs at a resistance before crossing back below our EMAs. Let's see how this plays out to further identify this phase of the EMA trading strategy. As the EMAs move closer together, we fail to make higher highs, and price action candles begin to move below both the 8 and the 20 EMA. Our exhaustion extension has taken place on this candle here, when the selling pressure increased and started to move price action back below our short 8 and intermediate 20-day exponential moving average before crossing the EMAs themselves, signaling to us that the move has been completed and it's time to close our position in profit.